So hello guys, welcome back to another session. Okay, and I was not able to do this session yesterday night, so I'm doing this today morning. Okay, latest casa backtesting. So okay, now on the last session, on the very first session, we were actually up around $300. In the first session, we made around $250, right? I think 200, right? And in the second session, my psychology was not good due to some reasons. That's why I lost it because of that psychology. But anyways, we are back with another. Okay, let's start the trading backtesting. So if you don't know, I'm using latest casa for backtesting my strategies, and I'm not on a pro mode. I'm just on a ad free mode. Before you do anything, you have to load the layout. Okay, see, I'm not a professional trader. I am going to lose. Session is not for you. This session is for me. Okay, so we are going to start liquidity. Liquidity. Let's go on first daily time frame. Try to analyze what is happening first, and then we'll see what we can do. Right? As let me just delete like erase all the drawings for a moment to see what is actually happening in the price action. Well, I saw that okay, this is the low. Okay, these are the equal lows. In the previous sessions I was anticipating that these lows can be taken. Okay, now these lows got taken. Okay, but it didn't got taken that much. You see, like low, this is low, and this is not that much. It's not a trade on the liquidity. It's not a good trade on the liquidity, and the price really went upscaled. It really went out of it. It means the price is just enticing people to think that the market is going to reverse. That's what I anticipate. Okay, it is making people think that the market is going to reverse, which is not true. Okay, so it is going to take out this last bit of liquidity. Okay, can you see this last bit of liquidity? It is take this thing out, and I want the market to go on take this liquidity. That is why daily time frame scenario. Okay, this is what is going to happen. Okay, so on the last day, see this big white, or you can call it green candle that went up. It means that it I just wanted to take out. See, I was waiting for this high to be taken so that it can like easily come down, right? If this high gets taken, then I can anticipate okay, the this thing is going to come down again because the buy stops are not taken. But instead what it did, it went higher then went lower. It means it has created some buy stops over here. Some high quantities of buy stops have been created over at this point. Okay, I hope you are able to understand this thing, right? Okay, now if buy stops are created, then these buy stops must be taken in order for the market to go back to this sell side liquidity. Got it? So if the buy side liquidities are taken, we are more confident that the market will go on to the sell side liquidities. Okay, that is good. Let's see what's going to happen. Now let me just get back all the drawings. Sell side liquidity. Can you see the sell side liquidity is taken? This did it. To all drawings. On this sell side liquidity, I am waiting for it to take this down. This price didn't take all the orders and it really went up. It got the buy stops then went up. Got it? Anyways, so now let's start. The okay, there is a high price swing and this is an equilibrium line of this pricing. Let me go on to a shorter time frame for an example, like go on 1 hour. Just tell you this was like down close candles, and this is what this up close candle is considered. For me it's considered as an order block. Okay, I'm not perfect at order blocks sometimes. Okay, which I have noticed I am not perfect. Okay, this particular thing, this particular up close candle is considered to be the order block. Okay, if I'm doing something now, you guys can suggest me, okay, that you are doing this as wrong or something. Now so let me open the chats. Nobody's on the chat and I don't care. Let it be because I'm doing it for myself. Chat open just in case nobody. uh Anyways, so let's wait for this particular buy side liquidity to be taken. Okay, this is buy side liquidity and this is high buy side liquidity. I'll say let's copy it. Okay, and extend it. Got it? The buy side liquidity. So I was expecting the price to from this pricing to this pricing. Okay, See, this price swing to this down pricing, this is the equilibrium line. Can you see? This is comes in the middle. This is the in the middle. Okay. Now we expect the price to reach to equilibrium, but the fact is it has not taken on the buy side liquidity. I want it to take down the buy side liquidities. Like I will get more confident if it takes out this thing. Okay. Let's start. A time frame, not daily time frame. Go on 1 hour time. You have to analyze on 1 hour, then take your trades on the sorry, analyze your trades on the day. My daily time frame is that it should go something like this. Let me just try to predict the moment. Where is that? Okay. So I want it to do something like this. Okay. Or this high, then come back down to reach the got it. This is what I want it to do. It can somehow penetrate this upward swing. Okay. And I don't know if it's going to penetrate that much or not, but I don't want it to go above this particular high price swing. Okay. Alright. This high price swing. Well, I can actually, instead of trying to make it keep downwards, I think that this is before this downward move started. This is the upward close candles of 1 hour. Can you see? So these are the up close candles before a downward swing. I'll consider them as an order block. Okay, and the most, I'm just trying to be perfect at order blocks. Okay, I don't know. Doing any mistake, you let me know. Good. So these up close candles. Okay, now I mark the area. Is enough for it. Okay, so these are up close candles, order block, and the price remained below this order block. Price remained below this order block. Okay, but it takes out this thing. I will really be confident. Okay, but the explanation of my trade is, you see, the market. I think that when the market opened gap down, okay, it took a high price swing, then took out these buy stops, then took out these buy stops, went in here, but it didn't take out this buy stop. Just wanted to pierce this buy stop a little bit. Okay, fine for me. So this is 1 day time frame order block that we identified as the violet color. Okay, that is the midpoint of this thing. Okay, I wanted to take out this buy stop till this midpoint. That will be fine for me. Okay, and let's see if there's any change in structure before this happens, and I might take it to the equilibrium, because if it doesn't want to reach downwards, if it want to reach downwards, it's going to do it anyway. Okay, so I'm going to keep the both scenarios in mind, but I'm more little bit bullish and then downward swing. Okay, let it be. Let's now play. Okay, enough talk for the day. 3 minutes. I'm done. Okay, we are right now on what? We are on Friday 13th. Okay, Friday 13th we are on. It means just 1 day of the thing is left. Okay, so like last week day, I'll just avoid trading on the Friday. But if I find scenario, I'll do it. Okay, we are back testing. This low got taken out. Okay, I expect the price to go to this equilibrium. Will this thing go to some equilibrium point or not? Let it be. Any fair value gap? Yeah, there's a fair value gap has been created. Time frame 5 minutes. So there's a fair value gap in here also. Okay, so there's a fair value gap and done. Okay, we can take a trade. Can we? These are equal highs. Let it be. I want the price to go to that point, back to that point. Ah, it's in that price zone. Okay, it has made around. Okay, these lows are taken. It didn't take out this low. This is, let's take a trade. And because I was yesterday losses. Okay, I'm not going to take a very big trade. Remember this thing. Not going to take, $20 loss, $15. I need to keep up with the money management also. So let's try it down. Okay. I'll expect the price to take out this liquidity or maybe this or this till this point. I'll start trailing as soon as I find the liquidity. Okay. The price is in that zone. And so here's short position. I'll keep the this high as the point. Okay. Keep this high as the stop loss. And we put this for it could be a draw on liquidity. Go with the real candles. Can we see that is price going to go up? There's a liquidity right in here. Fair value gap got broken. Can take out. There is a good chances. Not good chances. Okay, let's take a look. That much. Done. Till this point of liquidity is fine, or this point. Can you hear? And this. Okay. Like this thing. Take a market. It sell. Current balance. I'm gonna take around just 0.1% of the this amount because I don't wanna go in drawdowns. Okay. Really up. So 390 only 4% is up. Let's see what it does. $35. Well, because of the great price swing. So this is the point now. This particular up close candle is now acting as an order block, I guess. Okay. There's a fair value gap right in here. The price can come back in this fair value gap. Okay. There are good chances the price can come back in this fair value gap. Let it be. Okay. I don't think there's a good chance price to come back in this fair value gap because this is this. Can you see this up close candle? Okay. So this up close candle is actually acting as a order block the price. So it's trying to push the price below this point. Okay. Then it means I can grab my this, what do you call it? See, already we are on $41 of profit. Okay, my target is 46. For $5 I should not waste, you know, because the momentum is too much great. Okay, price can swing back. Okay, I don't want it to take out this target because see, because the momentum is very great, it can come out to take these highs as well. Okay, these lows as well, because these lows are the ultimate sell side liquidity. Okay, and then if these lows are taken, equilibrium line has less chance to reach to that point. Okay, we right now at 15 13 20. Okay, fine, just push it right over here. Plus, okay, it started to got up. Okay, got taken. Now what should I have learned in this? Okay. Hmm. If the price comes back again, there's one fair value gap but this one is touched, but this fair value gap is not touched. Okay, what's my what did I do wrong? I could have like trailed this point. Okay, see, touch this point, it means I kept this point over this high and it's a wrong thing. But okay, I already gained what I wanted to, that is like $29. If it comes out to this fair value gap, somewhere in this fair value gap, okay, I'll try to take a. It just barely touches it and then it came back down, I would be too much of remorse. Okay, shouldn't have been so mischievous about the stop loss. Great price swing before the point. Before it touched this point, did a great price swing. This is definitely going to be taken out, right? what is this low, and these lows are definitely going to be taken out. And the time right now is actually what, it's 17:50. 17:50 is 5:50. Okay, so 5:30 Indian time, Indian Standard Time is the time when the New York session starts. Okay, kill zone, I guess. Okay, 5:30 to 7:30, 2 hours. So 17:30 to 19:30. This is the zone when the price is going to go downwards. Okay, so in the London session, it has already gotten down. Okay, I expect it to go down. Okay, again, but can you see it didn't take out these sell side liquidity and also these sell side liquidities? It is going to go up. The chances are that it is going to go in this particular fair value gap. Can you guys see? This is a like larger fair value gap. Okay, this is a great fair value gap, and it has not been touched at this point. Okay, see, can you see this fair value gap? It is just touched. Should have gotten to that point. Okay, now let's see if it's trying to make any structure. Okay, and there's one more fair value gap that we guys can see. Okay, let's be here. Okay, can you guys see this fair value gap? Yes, this is the fair value gap, okay, which I'm talking about. Although this fair value gap is little pierced through, but yeah, the chances are that before the session starts, okay, at 5:30, the price can take a high swing, then come back down to take those liquidities. Okay, so a Judah swing before the actual downward movement that can happen. So it's going down, it's going to shoot up. So on a very low time frame, 1 minute, trades in here. Price sell side liquidity is being okay. 1 3 minute time frame. That's a good momentum, right? Right over there, you can see a good momentum. So the price broke from this point. For that, this is the fair value gap. Okay, but there is a up close candle, and this is what, this is what you call it, a fair value gap. Okay, so here's a fair value gap. I'm looking for this sell side liquidity to be taken, right? This sell side liquidity, I want it to be taken. See, it's not a good probable what you call it, trade. Okay, and that is the reason I'm not gonna go with $10 loss again. I just want to make enough that I can just go out of this day profitably. Okay, I'm already $30 up. Take some reasonable trades. Want the price to come back to this fair value gap. Why it's value gap? Is it not touched? Touch that fair value gap. Is it going to pierce through, or is it going to see? This is the market structure. Okay, this broke down. I'm wanting to take a trade in this fair value gap. Let's go on to the microstructure. This is 1 minute time frame. On 1 minute time frame, if there is there's a breakdown and then fair value gap, I'll enter in that fair value gap with a very smaller stop loss, but with a what do you call bigger target. Okay, that's what I'm anticipating it to do. Okay, I expect this could have been the displacement point. Okay, right, because down, see, it was trying to go higher, higher, higher. Manipulation happened at exactly 19, it means 7. Is it going to take out these buy side liquidities or not? Okay, so here's a breakdown. Fair value gap created. I'll take an entry, put my stop loss over here. Or should I put it here? On this high would be have been right. So I'll take an entry. Point. Okay. I'm putting the target on this point. Okay. The target, and again trade. Take a sell side trade. Market order, whatever you call it. Again 0.1% trade. See, although I did was profitable in the previous trade, but this thing is not giving me that much conviction that it will happen. Yes, let's go with a just a single 10%, sorry, 0.1% of the risk amount, and let's place a trade. check out if there is any kind of, you know, the trade has been placed. See, downward swing. So in the bigger price movement, I know that the price is fractal, okay, right? Whatever the movement that is going to happen is going to be happening in here also, okay. The good chances are there, like I just don't want the price to go into this thing, okay. So in $10 loss, let's see what is going to happen. Got taken. Why it got rejected from the buyer? It's not going to do anything. Okay, anyways, $10 loss taken, let it just go out, okay. That is the reason I was not taking. Okay, these equal highs were created. You're going to take these highs. Oh, it's going to go in the fair value gap. Oh, oh. It is wanting to go in this fair value gap, okay, because this fair value gap, it was just little touched, it's mitigated, okay. It's going to go in this fair value gap, obviously. It's very good, but you know, the time has ended, and I do not expect the price to now give me any kind of trade today. What I've done, I'm just 29 minus 10 is like I'm just $19 up, okay. It's fine. We're at least up, okay. On Friday, usually on Fridays I don't get any kind of movement, okay. So equal highs got taken, and these are also equal highs with some fair value gaps inside, okay, and I want it to get taken for sure, okay. This is the moment where I want the power price to go back down in the next week, because this week the time is right now 19:33, and around 24 to 30 the see, from 7:30 to 9:30 the kill zone has gone. It has not given me any kind of movement. Not going to take a trade because it's 7:30, end of the week. I won't be taking any trade in usual, okay. Not trying to take out this low. Is it going to take this low or not? Around it's 8:16 p.m. and till 2:30 a.m. next day market will remain open. I think go out, okay. So it just touched the point. I wait for the price to come back. Do you think up, down, and can't be ready? Okay, price did swing in this fair value gap. If I take an entry in this fair value gap, let me see. This is a fair value gap, entry, downward swing. Again, this broke decent lows. I go on a 5-minute time frame, like something with a good momentum, okay. Ah, if I'm not going to take a trade, I'm just gonna watch the price. Fridays, it is going to do opposite of what it has supposed to do. So this is fair value gap. Can't take a trade, right? Because I have to reload the base, so I will lose all my drawings. Why are not fixing it? Doesn't get placed. Have to somehow reload the page again. We are on 1 minute time frame. Okay, let's end this day. Buy sell liquidity. Buy sell liquidity. 'These sell side liquidities are not taken yet. It will be taken a little time, but I think it's coming for these buy side liquidity. This one. I mean, 225. Obviously, I'm not going. 30. Okay. Saturday 2:30. Monday, right? Okay, and 5. So they have started. Okay. Can't take trade. Have to reload. Verifying the human water. Mic check. Hello. Oh, okay. These sell sides are not taking. Oh, no. Yeah. Again, let's replace buy side liquidity of this thing is taken. So buy side liquidity right now over here. Before the price moves in a particular direction, I want it to move down. Okay. For this week, I want it to move down. It means for Monday, it should first go up. Okay. For Monday, it should take out the buy side liquidities. That is what I am anticipating. I don't know what is going to happen, but yeah, it should first take out these buy side liquidities. Then it should go down for that daily. So first it should like take out these buy sell liquidities. Got it? Once it takes out these buy sell liquidities, then it should come down to take out these cells. Okay, that's what I'm anticipating for this particular week, which is right now 23rd January. Let's see what is going to happen. Okay, so the trade has been of 37 minutes. Yes, let's get back to this lower time frame, 1 hour time frame. Before it gyrates upwards to these buy side liquidities. Okay, actually trying to purpose it looks like it's kind of liquidity, just 1 day time frame order block. Okay, it's the midpoint of the order block that we are talking about. Okay, so now it's getting safe. I don't know what had happened. So this is the high price swing, because the order block, why I'm reducing this to this point, can you see? From this pricing to this pricing, that is the order block. That's it. Okay, up close candles. Got it? So this is the up close candle before that downward move happened. This is considered as the order block. Okay, and now it should first go upwards and come down. Wait, that should happen. Now what's the time? It's 3:30 in the morning, and obviously 3:30 in the morning we're not going to take a trade. 10:30 a.m. Indian Standard Time, New York starts. 12:30 to 2:30 is the London time zone or London kill zone. Okay, 5:30 to 7:30 p.m. is the New York kill zone. So this is not time I'm going to take a trade. Obviously, after 10:30 I'll start making or forming some kind. Okay, let's see what it is going to do. Buy side liquidities are resting just above this point. Taken out. And that's what I was anticipating. I think in the start of the video, around 10 or 20 minutes, I've said this. First, these buy side liquidity should be taken in order for me to make a bias which will take out the daily bias side liquidities. Daily bias, sell side liquidity. Got it? Now, what it means that now the price, if it shows some kind of willingness to come down, then we are going to look for this. This is Monday. Monday is usually what kind of opposite movement that happens. In the sense, if the market, if the weekly candle is supposed to be no blue, oh sorry, think blue, if it's supposed to be red, it means it is supposed to be closing down. Then on Monday generally it rallies up, then it goes down, and then it rallies upward in Friday. Okay, so Friday Monday is the opposite of what is the weekly bias sometimes. So not sometimes, I'll say mostly this is what happens. Okay, got it? I was expecting my uh, PC to hit, because it's kind of what you call it at 2K. Anyways, now is the time when I look for some sell side trades. Okay, this is a very good high price swing. Okay, and some kind of downward candle is being found. Oh, we are on 1 hour time frame, and this is 1 minute. Let's get back to, okay, saved. Guys, as you can see, this buy side liquidity is taken. Okay, and somewhere around this zone the price should reverse. That's what I expect. Or will it keep rallying? What do you think, guys? From your opinion, and tell me. Okay, buy side liquidities are now taken. Okay, this buy side, I told you that it is going to take this buy side liquidity out. Okay, unnecessary price movements, you have to delete it. Okay, I told you this thing should be taken out in order for the price to go back down. Got it? Now is the moment I will expect the price start delivering downward things. First, let us just try to take all the orders. Okay, it should gyrate in between these. Okay, let it take out all the orders. For example, 10 minutes. 10 minute time frame. 15 minutes is fine. So these are the two lines of buy side liquidity. This is particularly the midpoint of the 1 day order block that we found. That is the midpoint of this thing. The price usually just remains below it, but because this is the zone, the midpoint should be like this point, be the midpoint of the zone. Further, clarified that order block. Should gyrate in this price. Should gyrate in this position. Take some orders. Time right now it's 15:15. What? 10:45 was here. What can I expect? Monday. Any trade anyways. Now try to find out trades if it's not showing us any kind of trade. Time right now 17:30, 5:30. Taken any kind of low. Any kind of low that is broken. To anticipate for the price to go down. We wait for it to. Okay, I was expecting it to gyrate it. Going up. Respecting order block. I don't want to see it go above this point. For the time now, it's Tuesday, 1 a.m. back. Not Tuesday. Still like it's going up. It's going up, and it keeps on going up. Watch. We're going to take out these fair value gaps. Pressure on there. Buy side liquidity. Tuesday, like I'm anticipating it to go down. Okay, it has not respected this thing. I should delete it. I should delete it. Not respect. Okay, so his movement, 50% of his. So it broke this. East broke. Reverse from. There is a daily order block from this. Come into this, then reverse. Okay, if this thing has broken this point, at least it should come into this and then reverse. Then we'll see what. Okay, maybe it's the point it's not going to. It's not wanting to take out these lows or not. I don't know. It's clear right now. Extend it. It. Got it. The buy side liquidities got taken. These are the buy side liquidities over here. Let's see. Let's go on our smaller time frame, like 1 hour. Back to these. Okay. These are the equal highs, but this is the zone where the fair value gap is created. At least go into this fair value gap and then come back down to actually expect the price. Everybody is thinking, okay, they're trying to make the people. Okay, it's Tuesday only. The manipulation can go till Tuesday. Okay. Wednesday is the moment we wait for the moment. If it doesn't give it, let's see what is going to do. Right now it's Tuesday, 4:30. 4:30 is like it's starting. It's a high price thing. Price should come down to this buy side liquidities or what you call it, down close candles. Equilibrium point I am talking about. Oh. Let's start. It's 15 minutes. Then I till then. See what is It come There is no fair value gap in here, but there is a fair value gap while this particular thing was created. And wait, I think we have a unicorn. This is the fair value gap. Is this point fair value gap created, and before this downward swing, this is an up close candle. Okay, and you see that this is the point. Okay, now see this up close candles. This is the downward point, and it's in the fair value gap that we are anticipating. Okay, this is, I think, the unicorn setup. As far as I might be something wrong about this, but there's any chat. There's no. Okay, I'll set a limit order. Should I set a limit order or should I go into smaller time frame? Okay, if I'm expecting downward price, oh, there's a fair value gap right over here also, but it got touched so many times. There's less chance of it to get back to this point. Okay, it has been touched so many times, so there's less chance it will go back to that point. Okay, there's a little fair value gap in here also. I'll keep my stop loss at this point. Okay, I need to form my entry somewhere over at this point. Okay, go back, go back. Trying to give me a scenario to just take a trade and don't wait for something. Hitting, hitting these equal highs, short term point, really gap. The long term momentum is going to be downward. So anyway, these things are going to be taken, but these are equal highs. Suppose they can be taken. Okay, price is moving downwards. I wait for the price. It got down. I didn't enter at this point. Okay, I was waiting at this point. What I have done wrong? Get back and try to analyze. The market gave me 2 moments to actually enter over here, but I didn't enter. Stop loss over here at this point. Okay, I was going through the small points, but let's see. I have taken a right now 12:30. Okay, now we are at nearly at 1450, means around 250. The price did swing upwards. Okay, did it take out this low? It has been taken out a little bit. Okay, now the price is back to this point, and I'm going to look for what I was looking for. Okay, let's try to do it. Comment again, get back to this time frame. I have seen a good rejection. Expect this point. Okay, now I'm going to take a trade. If it say shows me some kind of downward swing point, okay, then I'll take a trade. Okay, downward displacement with a fair value gap, then I'm going to take a trade. Okay, Okay, here's a swing downwards. These lows got taken. Okay, here's a fair value gap. I'll enter in this fair value gap. I'm not going to wait now for it to come back to this point. What's the time right now, by the way? It's 14:50, 3 p.m. Is it going to take out these lows? Do you think? That now is the high time I take trade. So my trade would be somewhere like these lows are not taken, so they are going to act like a sell side liquidity. Okay, not properly taken. They has been taken, but not properly. Fine, good. Like the price to do a move. Yeah, at this point, this high I'm going to consider as a it was taking out this buy side liquidity. Oh, sorry, this fair value gap, this downward swing fair value gap. Can you guys see? It came back down to take out this buy side liquidity. Okay, should I enter now? The down movement is just way too massive. In 10 time. Right? Okay, if I could have taken a trade over here, then a profit at this point. One candle profit done. Ah, bye bye. I think there is some kind of news which is launched here, I guess. Okay, the price swing has been made to downward, but I was not able to take a trade. Okay, I could have taken a trade and put my stop loss over here nicely. Okay, it could have taken me out with some kind of profit. Anyways, gotta watch what we gotta watch. 35. Okay, red thing. Or hmm, price to go. Is the equilibrium pricing? This is nearly the equilibrium. Set the downward will reach to this is there's a sell side liquidity over here at this point that can be taken because I'm not in trade. I have no chances but to just let go of this. Fair value what pricing the stop loss is high. Okay, I'm support pricing, but I should remain below. Market sell percent current balance. Okay, I'm going to take a 10% trade. That's 0.1%. That is a trade. Less chances of less chance of it to be going to this target, but yeah, it's nice price. Yeah, I am exhausted. We'll come back with another session. Okay, where I am ending the session. Okay, I'm just exhausted right now. Okay, so before we go, I'll just tell you one thing. Can you guys read the disclaimer again? Till then, tata, bye bye.